Good morning, everyone, and welcome to the Trade Talk podcast. Today, we have to face two major events. The first one, the outcome is already out from the global markets, and that is decision on the interest rate from the Fed. So, policymaker says very clearly that risks are moving into better balance, but no cut until officials are more confident on inflation path. So, one thing is very clear that in the near term, I'm going to say there was like expectations that the interest rate cut will come in the month of March from the US Fed, but that is not going to happen now. But the overall data is little bit better, and the way they are working on the inflation to come down to reduce the inflation. They are working on that, and I think that is coming into the control. So eventually the rate cut will happen, but in the near term it's not possible, and that's the reason 10-year bond yield was down more than 2-year bond yield. 10-year bond yield was around 3.93 yesterday from the levels of 4.05, which is positive. So if we go through with the global macros, they are positive. 10-year bond yield is around 3.93, the dollar index at 103.5, and crude oil is also now back to the levels of $80 per barrel from the levels of 83. So which is like going to support emerging markets. Now if we go through with our markets, then on Wednesday we saw a sharp rally in the market as per expectations after opening little lower. 19,000, 21,000, 448, 450, 475 acted as major support for the market. From there all the way the market closed at the highest point of the day, and in fact it has broken almost all its important level like 21,600 or 650. So based on its technical formation, now the next level to watch out for would be 21,850. Above that we can expect breakout in the market, and which may lift the market towards 21,950, and in the best case scenario 22,000. So possibility is there that we may see the levels of 21,950 and 22,000 or maybe 22,150. But in case if it fails and if it sustains below 21,700, then we can expect gradual weakness towards 21,400. But it should not break 21,400, because in that case the market will turn weak and it may even retest the levels of 21,000 in next few days, with a major support at 21,250. If we go through with the monthly chart of the Nifty, then it is like indicating us that the market is at indecisive levels. It has formed long-legged doji formation at the highest point of the rally. So here now again bulls and bears have to decide that which side they can move the market. Now for the Bank Nifty, as per expectations, we saw a spectacular rally from the levels of 45,000 to almost 46,000. Now based on its technical formation, the next immediate hurdle is at 46,600. So we may see those levels, or in the best case scenario 46,900. These are the levels on which we can bet in today's date. In case if it breaks the levels of 45,700, then we can expect gradual weakness towards 45,000 levels. So Bank Nifty is also showing strength, and it is above its important resistance level of 45,700, which is positive. So these are the major levels on which we can keep a close watch. Buy call options or buy put options as per the breakout or breakdowns in the market. That should be the strategy. Again, try to reduce weak long positions close to 22,150 levels. That's the overall strategy that we should follow in today's date. That's all from my side. Thank you very much for listening me, and have a great day to all of you.